Hey everybody. So this session we're going to talk about how to use the profit and loss statement. If you don't know what I'm talking about as far as the profit and loss, then you're going to need to check out one of the videos that talks about the importance of having a profit and loss. But what I'm going to do is I'm going to give you some guidelines or numbers about how to, you know, um, kind of figure out what the profit and loss statement is telling you so that you can stay on course. All right, I'm going to make a couple of assumptions. One, that you have a profit and loss statement. All right, if you don't have a profit and loss statement, and obviously this isn't going to be very useful, you have to have a profit and loss statement. You got to file taxes at the end of the year, and an accountant is going to use a profit and loss statement to do that. You can have a bunch of receipts stuck in a shoebox, but that information is not very helpful. You don't want to know whether you're making money or losing money only at the end of the year. You want to know every day. You should be able to look at your profit and loss and know, am I making money or am I losing money? So how are we going to use that information? So the first thing is that it's going to be up to date. And the second thing is that you are going to be confident that you are capturing all of the transactions that are going on, that there aren't secret transactions that will only get caught up later, that, it is current and accurate, current and accurate. All right. So one of the most valuable things about the P&L, it's going to tell you, right, what your revenue is, okay? So how much money is coming in? How much money, came in this month? How much money came in last month? How much money came in this week? And this will tell you what's going on for the year. And it's going to tell you what your expenses are, okay? And hopefully your revenue is more than your expenses. That's called profit, right? If you don't have profit, then your business is not effective. And we'll talk about why profit is super important in a minute here. Among the expenses that you're going to have is you're going to have payroll. All right. Payroll in most law firms is going to be your big ticket item. That's going to be your biggest chunk of change, right? Now, when I say payroll, I include your salary. If you are the owner, you should not be living on a draw. You should be getting a salary. That doesn't mean that you don't take draws. It doesn't mean that you can't take money out of the business, but you should have a salary. And that such salary should be sufficient so that you could replace yourself. If you took your salary, you could use that money and hire somebody to do the work for you. So if you need more information about why to do that, check out this book, Simple Numbers, Straight Talk, Big Profits by Greg Crabtree. The first couple chapters explain why it is so important that you get a salary. One, the IRS wants you to have that because that means that you're paying payroll taxes and Social Security and whatnot. And so you're paying into that. But secondly, you need to know, is your business profitable? Is it not just giving you money, but is it actually profitable? Is your revenue above your expenses? So payroll, that's going to include you and everybody else that you're paying. Marketing. All right, what are you spending on marketing? If the answer to that is zero, maybe you get away with referrals, but you should have a marketing budget. And I would say that the problem with referrals, if you're specifically and only doing that, is that you can't count on them. So if you have a small firm and you only have a handful of clients, B&B clients, your marketing budget might be very low. But if you are a PI firm, a family law firm, a criminal defense firm, an immigration firm, whatever, you need to have a marketing budget to get clients in. And then the third thing is going to be profit. All right. Now, under expenses, there's going to be a ton of things. There's going to be, your Microsoft bill and your rent and, all of the things, computers, paper clips, pencils, all of the things that take to physically run the office. If you're remote, then it's less. If you have an expensive office suite, it's more. All right. So, but all of that gets tracked there. You need to know. You need to know what you are expending and what your budget is. Now, let's go through some proposed percentages here, because this is super important. And I've talked to a number of people. I've read a lot of books about it, and there is some variance on what these numbers should actually be. So I'm going to give you the ranges. Payroll, 40 to 45%. Okay, so if you were doing $1 million worth of revenue, let's just say your revenue is $1 million. That means that you've got between $400,000 and $450,000 for payroll, including you. All right, now you know how to budget. It can be lower. I don't have a problem with it being lower, but just recognize that that is probably where you're going to be at. We have vacillated. I think we've been as low as maybe 38%, and we've been as high as 50%. It kind of depends on a lot of things that are going on. But this is a number that you should be expecting. If you're setting a budget for next year or for the remainder of this year or whatever, you should be looking at 40 to 45%. Now, they're different practice areas. Some will be heavier lawyers. Some will be heavier paralegals. Some will be heavier support staff. But that's your budget. If you have $1 million firm, you probably want to try to avoid going over $450,000 in payroll. It sounds like a lot of money, but boy, it adds up really quickly, especially if you have some senior lawyers. Marketing, 15 to 20%. Now, that seems high. At least it seemed high to me when I first started. What that would mean, again, on $1 million firm, you would do $150,000 to $200,000 in marketing. That seems like a lot of money, right? But if you are going to grow, you need to get your name out there. Now, what I will say is that if you've been in the business for a long period of time, you can reduce this number by doing other things. So, as an example, for 4 years, I had a radio show. Every Monday morning at 8 o'clock, I was on the radio, okay? There was a lot of value in that. It was pretty inexpensive. It wasn't free, but it was pretty inexpensive, and I got out to a lot of people, right? But it was just kind of general stuff. I didn't know if those people were interested in my services or not, but it was brand recognition. I wrote books, time-consuming, but didn't cost me much money. I posted on social media. I was out there a lot. You can do that and grow your brand and grow your name recognition for cheaper. So you can get below this. I'm not saying that you necessarily should be at these numbers, but if you're going to grow, you're going to have to spend money on marketing, and it's going to be a significant amount of money. And then profit. I'm going to say that you should do 10 to 20% profit. Okay. Now so again, we're going to be between $100,000 and $200,000 if we are talking about $1 million firm. Now, this is above and beyond your payroll. Okay. You need to get paid for the legal work that you do. The profit is for the risk that you take. And so when you're looking at it, if your profit is below zero, in the negative, or it's only a couple percent, you need to start figuring out how do you raise that. A lot of times what people do is they'll cut their marketing budget, which is probably the worst thing to do. What they should probably be doing is figuring out how to cut other expenses, or even invest more into marketing so that they raise the revenue. Okay. There's another reason why you need profit here. and that is savings. Okay. Your profit is not necessarily going into your pocket. You should not, in my view, should not be taking out the money all the time so that you're running zero. You should have a savings account. And I'll tell this story. I've told this story in my books. I've told this story on a variety of podcasts. In 2019, in December of 2019, we had $100,000 just sitting in a bank account. And I went to my financial advisor, and I was, perturbed at the fact that I was getting like a minuscule interest rate. I was basically nothing. It just, I felt like it was the same as just sticking under the mattress, right? So I go to my financial advisor and I say to him what my concerns are. And he asked me this question. He goes, "What's the money for?" And I said, "The money's for in case we have, some slow times." And he says, "Okay, so it has to be liquid." "Yes." "All right, well then it's doing exactly what it's supposed to be doing." Well, a few months later, right, March of 2020, what happens? COVID hits. California basically shuts down. The courts shut down. My DUI practice, which was accounting for a third of our revenue, shut down, right? The bars and the restaurants were closed. So people weren't getting popped for DUIs, which was a good thing, but man, it really impacted my bottom line. And so I basically had to live off that $100,000 to keep the firm afloat until we adjusted and figured out what to do. And so having money so that I never had to borrow, never borrowed a penny. And I highly discourage people from running their firms on credit cards or any kind of interest thing where you have to pay it back because now you're working for Mr. Visa. So instead of spending that money, I saved it. It was mine. I could use it if I wanted to, but I had that safety net. That's why you got to have a profit, because not every month will be a great month. We often make this mistake of thinking, I brought in $100,000 this month, so every month will be $100,000. And if that's the most you've ever brought in any single month, then the likelihood is no, it's going to be a lot less. So these are the numbers that I suggest. If you don't have your own numbers that you look at, and if you go into QuickBooks, you can get a report that'll tell you exactly where you are. 40 to 45% on payroll, 15 to 20% on marketing, and 10 to 20% on profit. And what does that leave you? That leaves you whatever else your budget is. Okay, what you can spend on furniture and everything else. Because where we look, 65, 75, 85. So you're looking at your other expenses being somewhere between 85% and what do we got? 55, 65. So 35 to 15% would be your other expenses. All right. Okay. I hope that's helpful.